What's up guys, Ben here and welcome to Motivation to Invest. Today I'm going to cover a very exciting stock which could be a real game changer. The stock is called Niu. No, not Neo the EV maker. No, not that Neo either. This stock is Neo Technologies. This is an electric scooter company headquartered in China. Surprisingly, this company is not a hot new IPO. And in fact, the company is well established and was founded in 2014 by an ex-executive from Microsoft. According to one source, Neo scooters are the best-selling scooters in the world, and they're all electric, and you've probably never heard of these guys. Now I know what you guys are thinking, Ben, why would I want to drive around in a scooter like I'm in Italy or in that old film Quadrophenia, when I could buy a Tesla and cruise down the highways? Well, let me stop that train of thought right there. So if you have ever seen the busy city roads in Chinese and Vietnamese cities, such as Ho Chi Minh, I'm sure you agree electric scooters have a major potential in those countries. Literally everybody rides scooters there because they're cheap, they're reliable, and you can nip in and out of traffic. So the Neo seems perfect for commuting and last mile deliveries. It has two fully removable batteries. So this is old school battery swap technology. You can literally just pull the battery out, charge it and replace it. The new model reaches a staggering top speed of 28 miles per hour. Wait, what? 28 miles per hour? Yeah, its top speed is only 28 miles per hour, but this does still seem okay for busy cities and last mile deliveries. What do you guys think? Now, as a former motorcyclist, one danger I do see with this electric scooter is they're completely silent. So if you are nipping in and out of traffic and you're in busy city streets, you don't want other people and cars to hear you coming. The silence of these is a risk factor I personally see, but these scooters seem to be very popular in China. In fact, one of the community commented and said that these scooters are everywhere in the major Chinese cities. So the power comes from a 1200 watt Bosch hub motor, which is based in the rear wheel. So you guys may still be debating with yourself and saying, Ben, is this really a great company? I'm going to give you 3 reasons why this is a great company. Firstly, the company is profitable. So this isn't one of those speculative EV hot new startups which is unprofitable and they've got projections 50 years into the future. This is a profitable company operating today, selling and delivering vehicles. That's reason 1. Reason 2, the stock has ran up by over 400% in the past 6 months. And reason number 3, the company posted monstrous Q3 financials. So revenue for Q3 2020 was approximately $136 million, marking an increase of 36.7% compared to Q3 of 2019. So generally, I say a growth stock is a company which is growing their revenues at least 15 to 20%. This is growing theirs at 36.7%, so fantastic growth from this company. But the bit I'm really excited about is the company's profitability. So the company's net income increased to $12.2 million compared to Q3's 2019 net income of $10.1 million. Now that may seem a modest $2 million extra in profit, but bear in mind we went through a global health crisis during the period of time when this data was collected. So Niu quickly recovered from disruptions to manufacturing and found the market to actually grow after lockdowns were lifted and commuters sought out socially distant, efficient and inexpensive forms of transport. The company increased the number of electric scooters sold by 67.9% year over year, up to 889,000 in Q3. So that's massive. This company sold over 250,000 scooters so far. As this company is an established company, it also has a number of franchise stores. So Niu increased its number of franchise stores in China by 182 to 1,266 and expanded to 36 international distributors in 46 countries. The company's CEO, Yan Li, explained our China sales volume has increased 70% year over year, driven by new products launched earlier this year and retail network expansion. Our international sales were affected by the global health crisis and sales volume grew by only 6%. We are working closely with our international distributors to mitigate the impact. A negative is our gross margin declined to 20.9%, mainly due to sales promotions and higher proportion of sales from the G0 model, which has a lower sales price and gross margin than other models. However, with continued cost optimization efforts, we expect our gross margin to improve. So diving into the share price for Niu, we can see that this company has a market cap of just $2.32 billion. In March 2020, the stock price was just $6 per share. It's now run up by 357% just this year. There has been a slight correction though recently by around 13%, so that could be a great opportunity to get in there with this company. Now, a reason the stock has corrected recently is it's missed its earnings per share estimates for Q3 of 2020. Its earnings per share estimates were 46% below what was expected. Following this result, the analysts have updated their earnings model. Either way, this could be a great opportunity to get in there on this stock. We'll just have to wait and see how far it goes. Now, later in this video, I'm going to go over some technical analysis of this stock to see if we can find a correct buy point. But before we go into that, if you guys are enjoying this video so far, please give the video an early thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed yet, what are you waiting for? Hit that subscribe button and turn that notification bell on. Only if you guys want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, let's dive into the numbers for this stock. So Niu Technologies, ticker symbol is NIU. Here we are on Stockopedia. For those of you guys which don't know, this is the platform I use to analyze stocks. If you wish to check it out and see if it fits your investing style, I've actually got an exclusive 25% off discount link. I'll leave that in the description below. Feel free, sign up and see if it fits your style. I personally use it all the time, as you can see in my many videos. On Stockopedia, each stock is given a stock rank, and that allows you to quickly analyze stocks. So currently this company's got a stock rank of 64, high momentum, so it means the technicals are looking good, the relative strength index, the volume in the stock, there's a lot of exuberance behind the stock right now, as with many EV stocks. Value is 18, quality is 64. Compound annual growth rate, wow. They have an average over the past few years of 80.2% compound annual growth rate on the revenue. Now that is incredibly high. As stated previously, around 20% is a growth stock. This is 80% over the past few years. If we dive into, so revenues forecast to increase in 2020 and 2021, as is net income. So like I mentioned previously, the company is profitable, which is so surprising these days, especially with all these hot new EV IPOs, as earnings per share is also forecast to increase. Analyst consensus. So there's only a few analysts on this stock. We've got Credit Suisse. 4 say buy, 2 say strong buy. No one's saying sell at the moment with this stock. Current ratio 1.77. So generally I look for a current ratio of between 1.5 and 2. Means the company has enough cash to cover its short-term debts. So that ticks that box for me. Return on capital. So they've actually got great return on capital, 14%. Which is green compared to the industry. So valuation, well, this company is profitable. And if we check out the PEG ratio, so that's the price to earnings growth ratio, that's a great metric. The great Peter Lynch in this book here, he uses to analyze growth stocks. The price of the stock, the earnings of the stock, and the growth rate of the stock, and comes up with this metric. So generally less than 1 is great. It's worth paying for that growth. This has a PEG ratio of 1, so that's not too bad. Price to sales, just 7.84. Now, if you watch my previous video on all the hot new EV stocks out there, I did I believe a top 12 list. You'll see most of those have price to sales of over 30. So with a price to sales of just 7, you're paying 7 times the company's sales. It's still high, but not as high as many others in this industry. And this is a very unique company compared to many of the others. They're all competing in the EV auto space, the automobile, the vehicle, the car space. This is competing in the scooter space. And I believe over time their product will improve. And as battery technology improves, I'm sure they can reach some higher speeds and still maintain great range on their scooters. But what are your thoughts on Niu? I'd love to hear your thoughts, guys. It's a profitable electric scooter company. They've already had over 250,000 deliveries. This is not a concept company like many of these hot new IPOs. So to me, it's a very interesting company. I'm actually going to dive into the technicals real quick and see if we can identify a buy point. As I mentioned previously, the stock actually missed its EPS projections, earnings per share. There seems to be a bit of consolidation going on with the stock at the moment. It's down 6% today. My first buy point, I'd say, looking at the previous supports here, I can see around $25 per share. That could be a great opportunity if it continues falling past this point. It could even just drop to $28 though. There seems to be a little bit of support there. So there's not strong support because the stock has ran up so quick. If it breaks past $25 a share though, which I don't believe it will, but let's say for all intents and purposes it does. Then the next major support is at $17 per share. The moving average is here, and generally stocks tend to, it's called mean reversion, so stocks tend to correct to their moving average over time. And if it's overextended, it tends to correct down, and if it's underextended, it tends to boost up. It's slightly above its moving average here, and the stock is falling, so I'm guessing, yeah, if it hits this moving average, that is around $20, $25, $26 per share. Could be a great opportunity to get in there. I'm personally tempted to dollar cost average into the stock just with a very small stake, just so I can track the company. But yeah, let me know your thoughts. What do you think of this company? Do you know of any other electric scooter companies, electric motorcycle companies? I'd love to hear your thoughts on those companies and their products. Are they better than Niu? So let me know in the comments below, guys, and we'll join in that discussion. And if you guys found some value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed yet, what are you waiting for? Go ahead, hit that subscribe button, turn that notification bell on, only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, I hope you guys have an incredible day, and I'll see you in my next video. Invest safe.